Hi, my name is George Dagnino. I'm the editor of the Peter Dack Portfolio Strategy and Management. This is a fascinating chart. I hope you'll find it that way too. Anyway, what you see here is this graph shows the ratio of the S&P 500 to the 30-year Treasury bond price. So when the ratio rises, like in here, like in here, like in here, and like in here, stock prices rise faster than the long-term bond price. Or let's put it in a different way, when the S&P 500 outperforms the 30-year Treasury bond price. However, when the lines, this ratio declines, like here, 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 what it means is that the bond price outperforms the stock market. And in 99.9% of the cases is the bond prices appreciates when the S&P 500 doesn't perform that well. So why am I showing you this chart? Well, you have to look at this graph here at the bottom panel. It's interesting here, this points when the two lines cross here, here, and this is why I'm showing the chart. Because when this line crosses, this two line cross, you can see that the bond market outperforms the stock market. Here it didn't, but again, it looks like a volatile period when being in bonds would not have been a bad idea anyway. Here again went below, and you can see here the bond market outperformed the stock market. Here there was another crossing, and in this period the bond market outperformed the stock market. Now the other interesting piece of information of this chart is that when these lines cross here, 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 or here, the bond market outperforms the stock market by roughly 2 years, from this period to this period to this period. So why am I showing this? Well, there is no doubt that we are in the midst of a big bear market. So the fact that this curve performs this way and there is a crossing here, it suggests that if histories have any lesson, that the odds are that the bond market, in fact the last few days it did, in fact several days it did, is that the bond market will outperform, likely to outperform the stock market. For how long? Well, again, roughly 2 years. So we are at the beginning of 2022. So 2 years takes us to the end of 2023, 2024. So this is a strategy. It looks like it's pretty conservative. Let's see if really the message of this chart will bear some fruits. I hope you found this analysis interesting for your financial planning. Thank you very much for listening, and stay in touch. Thank you. So long.